Good morning, Alex Cole, on this fine July 28th pre-market recording today. How are you doing, my friend?
Doing very well. How are you?
Hey, I'm doing okay. It's a busy season at the Data Wood household, as it is a busy season in financial markets. Let's dive right into the GoNoGo cross-asset heat map just to take a look at the trend perspective across the asset classes. What are you seeing, Alex?
Well, as we saw last week, there has been some movement into the risky assets, and we see that continue so far this week. The S&P faltered a little bit with an amber bar yesterday, but has roared back. Actually, the day before yesterday, but yesterday has roared back into a go trend with that really, really strong day after what we saw with the Fed, the reaction to the Fed rates. We see Treasury bond prices continue in their strong go trend. Commodities in a no-go. The dollar continues to be strong. And of course, Bitcoin chops around, and we'll talk about that later.
Absolutely. So let's turn our eye to U.S. Treasury rates, the yields themselves, with the chart of the TNX. And yesterday, the chairman of the Federal Reserve Committee, Jerome Powell, came out and raised 75 basis points. And I know when you and I are talking to a lot of the fixed income money managers and really investors of lots of stripes, sort of the pessimistic view was the expectation for a 100 basis point hike or for hikes inter-meeting, meaning they would happen sort of unannounced. And we haven't seen that. We've seen a more deliberate pacing in the rate hikes. This is not a show analyzing the the language used or trying to dissect what the Fed is doing. But what we can see in the charts is that investors are reacting very positively to a more measured move by the central bank. And so right now we're looking at yields on U.S. government treasuries. What does the trend tell you, Alex?
I think that's just the point, Tyler, right? That at the end of the day, we're rising rates fairly aggressively to combat inflation, but it's because the market kind of has expected the controlled delivery of those rising rates that the markets reacted so positively yesterday. If we look at the pure trend of the rates chart, we can see that it has continued to come off those highs that we saw earlier in June, and now we've moved into a strong no-go trend with the oscillator getting rejected at the zero line and falling back into positive territory. So that tells us that in the short term, we've got momentum in the direction of the no-go trend.
Absolutely. Well, let's turn our eye to the chart of the U.S. oil fund. USO being a frequent place for our commentary. We've watched the oil trade all through 2022. First half of the year, very, very strong. And right now, we find ourselves in the no-go trend, but at an inflection point. In the newsletter that went out Monday morning to all subscribers, we're basically at the same point that we're at today here on Thursday. Tell us a little bit about what you're seeing in terms of the squeeze indicator.
Yeah, for sure. So on Monday, we were in this strong no-go trend. Now we've weakened. We see these pink no-go bars as the oscillator continues to ride the zero line. Now remember, when the oscillator and the GoNoGo oscillator is at zero, that means that all of the inputs to our blended indicator are in their respective neutral territories. And so for every bar that remains the case, we show the climbing grid of the GoNoGo squeeze to indicate directionalist momentum. And that's what we're seeing here. We're seeing a smaller activity on the price bars, smaller price bars with the oscillator staying at the zero line. We also noted over the last couple of weeks the bullish divergence that we're seeing with price making these lower lows and the oscillator making higher lows. So now we're really at an inflection point. Price is moving sideways on smaller bars, oscillator riding the zero line. We're going to watch really carefully here to see if it gets rejected, in which case the trend is likely to continue to the downside. If it doesn't and we see it break back into positive territory, that could be an early indication that the longer term bull market in oil that people are expecting could be coming back.
Absolutely. We check in on these macro factors every single week here on the GoNoGo show because we know that the rising rate environment, expensive oil, rising oil, and the U.S. dollar have all caused headwinds for risk assets in the U.S. equity markets. So we're checking in on this, and we're seeing the no-go trends in areas of the market where we've seen a lot of strength in trend so far this year. And obviously, we're going to get to a few charts of some growth equities here at the end of the show that tell us during this, potentially it's just a pause in the upward trend of oil and rates. But for right now, while these are not accelerating higher, we're seeing a breath of fresh air in other areas of the market. So, Alex, let's turn to our third big macro force, the US dollar. And I know we like to use ETFs in this show, UUP being the dollar index fund. I see another important inflection point.
Yeah.
What are you seeing in the US dollar chart?
Yeah, very, very important time again on the dollar. Every time we've seen this trend continue higher, we've seen the oscillator find support at the zero line before price moves higher again. We've come off the most recent highs. We moved into week ago bars. The oscillator fell to zero, and we saw that squeeze build. We did see yesterday with that strong down day on the dollar as the U.S. markets went up, the dollar came off quite strongly. We do see that it's trying to break out of that squeeze to the downside. So that would be the first indication that this go trend in the dollar might be faltering. But as long as we're still in go bars, the weight of the evidence suggests that we have dollar strength. But as you said, this weakness over the last 10 days to 2 weeks has really allowed some rotation back into those growth equities that we'll see in a minute.
So for anybody who is new to the experience of GoNoGo Charts, Alex, why don't you take just a minute to talk about the blend of indicators in the price panel and then what we're seeing in the oscillator panel below?
Yeah, so what we did, we wanted to make sure that we got all the information we needed from a very, very strong technical process of taking a look at all of the concepts and indicators that we need to get a sense of overall trend. But with the fear of complicating the chart and overwhelming your analysis, we did not want to just overlay indicator after indicator after indicator on the price panel. We want to be able to see price. For example, right now we're coming down to these levels that were these recent highs. So we can look at this chart very quickly and say, okay, there could be a level here that's very interesting based on what we've seen before in terms of price action. So we, instead of throwing indicator after indicator on the chart, we color the price bars to tell us the strength of the trend. And so what you're seeing here in most of this chart of the dollar are blue and aqua bars. And those are our go colors, meaning that the trend is bullish and we're a go for launching an investment in this space. If you see a stronger correction or a downtrend, you're going to see pink and purple bars. Those are our no-go colors. And when the market is unsure and we're seeing uncertainty, we'll see these amber bars in here, which we call our go fish bars. So we've got go, no-go, and go fish, trying to keep it that simple. And then in the same way, momentum can be a very, very important piece of the puzzle. And we took all of the momentum oscillators that we find the most value in and blended them together into one indicator as well, where we can get a sense of momentum along with trend.
So we're looking at both panels for complete information in the market. So we've got trend in the top panel. Bottom panel is showing us momentum, but also volume and volatility. Yeah. So when that GoNoGo oscillator line moves from the aqua green color to a dark blue, we know that we have higher relative volume. We know that when it is at the zero line, that can be really healthy in an uptrend for momentum to surge positive and come back to a level of neutral. But we don't want to see it break below the zero line in an uptrend, in a go trend condition. That's definitely a threat to the trend, as you have enthusiastic selling or oversold conditions on the momentum reading, which is pretty divergent. Right now, as we're reading this US dollar chart, we've tested the zero line many times in this recent leg higher. We also built the climbing grid of the GoNoGo squeeze, telling us that from a compressed volatility perspective, a move in the direction of the break can bring a high velocity move in the price chart. And so we saw that break below zero, a real threat to the upward trend in the US dollar, particularly breaking on heavy volume. So, Alex, as we don't often look at currency pairs here in the GoNoGo show, but seeing the strength in the U.S. dollar being challenged a little bit from the momentum readings, let's take a look at dollar yen as just a simple pairs trade that has played out really strong over the first half of 2022. What are you seeing here?
Yeah, fantastic chart, really demonstrating the strength of the dollar. And what we're seeing over these last couple of weeks is a pullback to the levels of support that we get from the oscillator. So in very much the same way, a very critical time, and we're going to be looking at this chart as well. You can see when earlier in the chart, the correction was a bit more drawn out and a bit lengthier. We saw the oscillator break below zero and warning us that we were unlikely to go higher in the short term. We even got a couple of amber bars. Now, in the last few months, we've had another strong run in the dollar strength. It's fallen back to the zero line, found support there, rallied again. That's what gives us, Tyler, these go trend continuation icons, these circles telling us that momentum is surging back in the direction of the trend. And now as we cool off again from this most recent high, the oscillator's at zero, a go-no-go squeeze is starting to build, and we're going to watch to see if this strength in the dollar relative to the yen can continue. And if it does, we'll see support again at zero.
Absolutely. And Alex, if you wouldn't mind, let's check in on the Aussie yen, an important currency cross that lets us know whether we've got a risk on or risk off marketplace. Japanese yen being the flight to safety, Australian dollars being more heavily commodities based and a riskier place to trade. I'm seeing strength in the Aussie yen currency pair. Alex, what about you?
Yes, we had some choppy moments over the last month, and we saw the oscillator struggle to really find separation from the zero line. We saw this really big max go-no-go squeeze build up, and then this choppiness ensue. Then we broke back into positive territory. The go-no-go trend was able to repaint the go bars, and the last bar yesterday was a strong go bar, oscillator in positive territory. So most recently, some strength in the Aussie dollar relative to the yen.
So for all of our viewers, even if you're not an FX trader, it doesn't matter. There's a lot of information in these charts. And so when we look at a cross like the Aussie yen, what we're looking for is the risk profile of the markets generally. We can use that as a risk proxy. So Alex, moving on from our currency charts, let's check in on the S&P 500. As we mentioned yesterday, the Fed announced another rate hike, which did not end up in a high volatility down day for the markets. Instead, we saw a pretty strong price action, about 2.5% gain in the S&P 500. Tell us what you're seeing from a trend perspective here.
Yeah, this is starting to look like a strong chart, a strong setup. What we often like to see is when we've hit an ultimate low, which we did down here in this no-go move, we like to see the oscillator start to find and test the zero line towards the right side of a consolidation or a bottoming pattern, and then we see the oscillator start to become more favored on the positive side and break into positive territory. We see the amber bars creep in. They weren't unable to paint anything but no-go bars for a long time. Then we see amber bars, and then we see a go trend begin. Why I say I like this setup, and one of the strongest setups that we'd like to see with GoNoGo charts, is that we see the go trend emerge, and then we see it sort of cool off and retest. And when you get that kind of action, you think about that as sort of a mini bull flag there. It's small, but it's that buying that first opportunity after a trend has been identified, which is sometimes, the least risky way to trade new moves is to wait for the trend to begin, and then on the retest, that's when you have a low risk opportunity to trade. You can think about it in terms of traditional technical analysis. If you're looking at this as a little bit of a ascending triangle at the bottom of a move, once you break out of the triangle, right here, you sort of set this maybe as your upper bound of the triangle. You break out of the triangle, you retest that level, and then the price continues to go in that direction. With us, we visualize it with the colors and with the oscillator, and so we've seen that trend start. We see a little bit of a falter and a retest, and then very strong day yesterday as it creeps above the highs that we've seen, these higher highs over the last month.
Absolutely. Seeing the consistency of GoNoGo coloring with traditional technical analysis is really helpful, Alex. And particularly the fact that we don't have a lot of crazy lines all over the price chart. You can spot those levels, those patterns, and sort of the classical technical analysis from Edwards and McGee and all the other authors that you and I have grown to love. I think the GoNoGo squeeze is just so powerful here in sort of shaping what that bottoming process looks like. What we're trying to do with all technical analysis is visualize the behavior of investors. And so when we see that tug of war, that loss of volatility, price range continues to narrow in that panel, and we're seeing momentum sustained at this neutral level, meaning there's no directional momentum for the S&P 500. That's a very clear indication of some conflict between bulls and bears. Often happens at tops and bottoms. So we're watching that squeeze carefully, seeing it break to the upside, bringing an end to the no-go, at least in the immediate term, and seeing that retest and back to a strong go yesterday certainly gives a lot of strength and courage to the bulls out there. So,
Yeah.
Alex, let's get under the hood of the S&P 500. Great to see it at the index level. Let's look at it at the sector level. And instead of considering GoNoGo colors just on an absolute trend basis, we want to take a look at the sectors relative to the index. So when we're looking at relative strength, we want to see those trends of the ratio between each sector and the benchmark index S&P 500. As the market has bottomed and begun to head in the opposite direction to shape a go trend, we want to look at these relationships very carefully to spot new leadership in what could be a new leg and a new condition for the S&P 500. Alex, walk us through this GoNoGo Relmap real quick.
Yeah, looking at those relative strength ratios can really give you a head start on understanding rotational aspects of what you're seeing in the markets. And even just taking these top two panels, we saw relative strength in technology and discretionary creep in before the S&P itself got out of its no-go bars. So we can see here the amber bars and then the go trend that we were just talking about in the S&P. There was a little rotation into the risky sectors, technology and discretionary, ahead of that change in the S&P, and those go trends have been able to persist in technology and discretionary. The other trend that has been a real sort of a constant over the last several months is healthcare. We've pulled out quite a lot of healthcare stocks over the last few weeks, and that trend remains and strengthens. The one perhaps that we were expecting to follow suit was communications. Hasn't done that, but we're seeing that rotation into these top two panels, technology and discretionary.
Absolutely. Let's dive in real quickly just to the ratio chart of the XLY to the SPY. So that's that second panel in our GoNoGo Relmap, and now we're going to see it with the price action, same exact trend colors that you'll see on this ratio chart. But we want to see what the price action is telling us in terms of this ratio on a daily basis. Again, we're looking at daily charts, not long-term, weekly, or monthly, but we're also not looking intraday.
Yeah, that's
Alex, what are you seeing? What are you seeing right now?
That's a good point. Just to make at this point halfway through the show that these are all daily charts. Weekly charts, that's a longer-term perspective and may tell a slightly different story. We might be looking at these daily trends in the face of trends on the weekly charts. But yeah, on a daily chart for this ratio, XLY to SPY, we're seeing that strength in discretionary in the shorter time frame in the daily chart. We saw the bottoming process. We saw the same kind of scenario play out that you were talking about with the squeeze building as the bottoming process happens, with the oscillator sort of struggling to find separation between itself and the zero line. And then once it sort of consistently was able to find support at zero, that's when we're seeing this outperformance really kick in the discretionary sector. We're now at that retesting point as it comes back down to the zero line. So we'll look to see if that strength continues. But yesterday was a healthy sign.
Absolutely. And Alex, let's pop this out to a weekly basis just to show our viewers what we're talking about, and you can even give it a little longer range if you want to consolidate that. We're in a period of pretty strong no-go bars on the weekly basis, right? All of 2022 has been a no-go trend in the relationship of consumer discretionary to the S&P 500. So as the S&P 500 was correcting and in a no-go trend, this was a strong laggard sector of the market. So I want everybody to just have that longer term perspective on what the primary trend was. Consumer discretionary, consumer technology, information technology led us lower, and the larger cap growth equities were really the culprits in this major market correction so far in 2022. Getting us to bear territory was certainly you want to look for those laggards that are leading us lower. And so, Alex, on that weekly chart of the ratio, if we just step back to XLY to SPY, what we're seeing is a really strong up move, but on a weak no-go bar. That's 2 consecutive weeks in a row where we've seen that positive action. But in the face of this long-term downtrend, that's just a relief rally, right? That's still within the context of a longer-term no-go trend. Now, we know that all trend reversals start on the lower time frames before they show up on the larger time frames. So what we're pointing out this week is the leadership from growth equities in the face of a trend reversal in the S&P 500 on the daily basis. So, Alex, let's jump over to Tesla, largest weighting in the consumer discretionary sector. We've seen on a daily basis really similar conditions to everything that we've been pulling out today in terms of those max squeeze relationships and the break higher in momentum that precedes the trend reversal. What are you seeing in this chart of Tesla?
Yeah, very, very similar. That long, drawn-out process, like you said, that fight between the bulls and the bears, you should really see it here with the squeeze building again, and then finally we get away from the zero line, and we're seeing heavy volume as the price has climbed higher to a intermediate-term high here, and yesterday's bar after that sort of quick fall off, that yesterday's bar of strength is a nice setup as well.
Absolutely. Month and a half, 2 months of a basing pattern, 3 max squeezes before we saw the trend reversal. This is not a instantaneous or quick process, but seeing that is certainly encouraging for those holders of large cap growth equities. Let's check in on another one, Apple, from the information technology sector. The other area of growth equities that have been leadership in this trend reversal for the S&P 500. Looking familiar, Alex.
Yeah, and Apple's been a bit more resilient. We've seen the strength in Apple a little earlier here. You see it spend less time in that decision-making process before it broke out into positive territory. We saw the amber bars come in, almost 3 weeks ago, and then we've been in this go trend now. And you can see my cursor here. If you can see my crosshairs, you can see that level that really was resistance in that no-go move, now becoming support, that concept of polarity, and that really lines up with this new go trend, retesting those levels and then going again yesterday. So this is a very similar chart, but perhaps an even stronger image, just because it's been a bit more resilient, Apple.
Absolutely. So this is that traditional top-down approach to technical analysis. We look at the asset classes, we look at some of the macro forces that are shaping sector rotation and the nature of our markets here in the U.S. equity space. And then we're looking at the sector groups that are outperforming, the leadership within that context of a potentially new bull market for the S&P 500. And then within those sector groups, we're going to look for leadership on an individual named basis. That's how we approach technical analysis and the research process. That's what goes out every Monday morning to our subscribers. Alex, for the bonus round in our last chart of today's show, let's check back in on the Bitcoin chart. For those of you who are interested in the higher beta play, this has long been a performer very similar to technology and growth equities. And we're seeing some similar life coming back into Bitcoin as this basing pattern plays out. Yep. What are you seeing on this chart here, Alex?
Yeah, we got chopped around a bit with Bitcoin this week. That's the major difference, I think, from the charts we were just looking at with the growth equities and the S&P, where we had that new trend in place and then that little pullback, but kept us in trend. And then yesterday, the strength as it returned. Bitcoin has struggled after such a violent drop to lower value. After finding that aqua trend, it quickly reverted, and we saw some no-go bars before finding the go bars over the last couple. But interestingly, and this is, you've got to look at it all together. This is why we like to give, this is why we like to say that this chart gives you a complete overview of the technical analysis of anything, is that when we were in this go trend and we came back into no-go bars, we're looking at the oscillator then to see, well, if these are no-go bars, oscillator should break back into negative territory. Finding support at 0 is not what you would expect if this no-go trend was going to continue. So a little bit of non-confirmation there from the oscillator as we saw those no-go bars return, and then the support we find at 0 giving way then to go bars again on Bitcoin. So right now it looks as if it's the early days of the bulls winning in the Bitcoin.
Absolutely. And keep in mind, cryptocurrencies are trading 24/7, 365. So the data that we're looking at here on a daily basis, it's a lot more trading activity. We're seeing a lot more volatility, and certainly in digital assets than we are in traditional equities. But it's nice to pay attention across the asset classes to see some of these new go trends taking hold in lots of different areas of the market.
Yep.
For those of you watching on YouTube, thanks so much for checking this out. You can like and subscribe to StockCharts TV, and also check out the GoNoGo Charts channel. We also want to encourage everybody to download the StockChartsTV.com app so you can carry this show and many others wherever it may take you. Thank you so much for tuning in. We'll be with you every Thursday afternoon at 3:30 p.m. Eastern. And for now, be well, take care, and we'll see you next time. Cheers.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.